I suppose the reason I structured my business the way I did was because of that belief of you really need to understand the area. Data's great, and you need to review the data as well and understand what the growth drivers are. But having that intimate knowledge and actually having boots on the ground unlocks a lot of opportunities as well, and gets access to property that you wouldn't otherwise get access to if you're a national buyer.
Welcome to Get Invested on the Property Hub podcast channel, the leading weekly show to help you unlock your full self, health and wealth potential. I'm your host, Bushy Martin, and each week I go deep with the best investors, experts, leaders and founders to find out what it takes to break free from the grind, discover freedom and live by design. Subscribe now and join me and get invested in the life you really want. Let's get started. Hi, freedom fighters. How important is intimate local knowledge when it comes to you buying a property? And how do you balance this with a need to go borderless rather than your backyard in order to secure the best available property with the highest potential growth to satisfy your investment needs? Now, this is a conundrum that I see many investors trying to come to grips with when it comes to securing a high-performing property portfolio. And this paradox has flowed into the world of buyer's agents. And in my experience of working with a broad range of buyer's agents over the last few years, I now see that most of them operate on a spectrum that spans somewhere between total local area experts with intimate awareness at one end, while at the other end, I've seen the growth of a lot of buyer's agents with high media profiles who brag about their national footprint and the ability to secure any property anywhere on the strength of their data-driven and desktop analysis. But there's a real danger here because an area and a property can look great on your computer and it can be backed by kilos of AI-driven data points that can be used to post-justify just about anything. But it's not until you've actually walked the streets and you've mixed it with the locals before you can get a true appreciation of the local sentiment and perception of an area, which can actually vary from one street to the next. And on top of supply and demand, local sentiment can have a massive impact on the performance of a specific property and a specific location. And in this respect, nothing beats boots on the ground and intimate local knowledge. So I believe that the best buyer's agents land in the middle of this spectrum between the sort of local versus national and the quantitative versus the qualitative data spectrum, where they enjoy a balance of local intimacy with data-backed leading indicators, which is where today's continuing guest, Michael Olivieri, comes to your rescue, and we're going to deep dive on this very contentious topic. As you enjoyed last week, Michael's the founder and director of successful Central Coast buyers agents who operate as local area specialists north of Sydney in New South Wales. So welcome back and let's get invested again, Michael.
Thanks, Bushy. Let's do it.
Michael, we had a great chat in the last episode on your own very successful investment journey, and we sort of touched on your role as a buyer's agent and helping others to do the same now. But to sort of set the scene on all of this, what do you see as the biggest mistakes that property investors make when it comes to researching, selecting, due diligence, negotiation, purchase and settlement of a property and beyond?
Yeah, I think the mistake, one of the mistakes is not doing enough research and then doing too much research. I think obviously not doing enough research, you're going to fall short. You're going to select either the wrong property or the wrong area, and it's not going to perform the way you intend it to, and you're overall going to have a bad experience, and you're going to end up cursing property.
Yeah.
If you do too much research and you suffer from analysis paralysis, then that's not a good thing either. So you might know a lot, but unless you actually jump in and get your hands dirty, then you're also not going to get the results you want. So I think it's doing that right amount of research that you feel confident. You're seeking the advice from the right people in your team, building a team around you to give you the advice where you need it, and then actually acting on the advice in giving you.
Yeah, very good thoughts. We mentioned in the last episode your own experience about initially approaching a buyer's agent
who wasn't prepared to educate you on the journey, so you probably tilted back towards DIY. Given where you're at and what you're doing now, why do you think property buyers should engage a buyer's agent over finding and buying a property themselves?
I think because, like I said, building that team around you, having someone that's an expert that's been there, done that, is especially comforting for people that haven't purchased property before, whether it be their first home or first investment property. Engaging with someone that has done it, has proven track record, and understands the process, gives you a lot of comfort when moving through purchasing that property. I still think anybody's going to have, buyer's remorse and feel a bit unsure when they sign that dotted line, but definitely having people around you to say, no, you know what, you've done the right thing, back yourself. This is the right property for your strategy. It's a lot easier to do it.
Yeah, so when I hear a lot of investors who initially go, well, why would I spend 15 or 20 grand to get someone to find a property that if I spend enough time I can find myself? What's your normal response to that approach?
Yeah, look, certainly you can buy property yourself. You can do your own tax return too. Diagnose yourself with Google if you have a medical issue as well. But look, there's experts in fields, in all of those fields for a reason, and if you really want to understand the nitty gritty, the little tips and tricks, the years of experience that only through doing it and living in it and working it, you just won't get. And so that's something that I had to build as well over my journey. Like I think we might have discussed it off air. Like I didn't know as much as I did at the start as obviously I do now. I had to learn that. I had to learn that the hard way and put that effort into building that experience. So if you can pay someone and get that experience, why not?
Yeah, 100%. It's an investment in your own future and the growth of your knowledge as well as the property, I believe. If you're working with a buyer's agent like yourself who's actually trying to educate your client investors to improve their position down the track. In the opening, I talked about the sort of the national one-stop shop players versus the local experts. Given you've got really intimate local area expertise on the Central Coast in New South Wales, what's your feeling about the sort of national property buyers agents?
Yeah, I suppose the reason I structured my business the way I did was because of that belief of you really need to understand the area. Data's great, and you need to review the data as well and understand what the growth drivers are. But having that intimate knowledge and actually having boots on the ground unlocks a lot of opportunities as well, and gets access to property that you wouldn't otherwise get access to if you're a national buyer. You just don't have enough time in the day to build relationships with people all over the country for them to be calling you and sending deals your way. I don't know how these people that buy all over the country do it, but for me, it was very much about I know the Central Coast, and I very well. I've grown up here and lived here my pretty much my whole life. So, and I've really focused heavily on building relationships with people on the coast in all parts of the property purchasing and owning journey, so that I've benefited from it through my own portfolio, and now my clients are in their property acquisition and ownership.
Yeah, no, very well said. Talking about buyer's agents generally then again, what do you believe differentiates a great buyer's agent from the rest?
I think definitely one that's been there, done that, and one that I think it's not just buyer's agents, it's any business. Customer service. If you deliver an awesome customer service and actually care about the customer, that really is a big differentiator in any business. Yeah. But it's why in what I do, I try to educate people. Obviously, the Central Coast isn't an area that suits everyone for investment. So like I believe it is a great place to invest, but it's not something that suits everybody and everybody's budget, everybody's strategy. So it needs to be the right person that to purchase a property on the Central Coast as an investment. And so that's I really believe in the education piece, teaching them how to buy if they want to learn. I'll teach them and talk to them as much as and give them as much of my knowledge as I can, because if they then want to buy a property elsewhere, I don't purchase properties elsewhere, so they can either engage in buyer's agent elsewhere, or they can have a go at doing it themselves.
Yeah, extremely well said. So if there are those listening in that are thinking about this, what would your advice be to them in terms of the keys to selecting a great buyer's agent?
So ask the questions, about their track record, what they've done, what their education and background is. Understand sort of why they became a buyer's agent. For me, there are a few, like in any industry, when there's I suppose money to be made, people are always they can become quite transactional and just chase the dollar. But for me, it's more than that. I do it because I enjoy it, and I enjoy seeing other people get success from property. I suppose that's some of the questions I would ask a buyer's agent, and understanding where their focus is in terms of their area, the type of clients they work with, the type of properties they purchase regularly. That they're important questions to ask.
Yeah, totally. Because it very much is horses for courses. You've touched on some of this already, but in terms of Central Coast buyers agents, what do you believe sets you apart from the rest?
Yeah, well, like I've touched on, I've got a very personalised and approach, and so for me, it's more really getting to understand and know the client. I really take great pride in that. Build very close relationships with my clients throughout the journey, and I look to continue that even after purchase. So that's something that I've always put a heavy focus on in structuring the business.
Yeah, and I love that. Looking more generically then, Michael, what are your top tips on how to choose a location to buy a house?
So, there's many sort of free resources you can access and paid resources as well in terms of data, understanding what growth drivers are, where infrastructure and amenities are going or where they exist. Looking at all the different metrics that property investors look at. So really understanding the area, knowing what people want in that area as well. So, for example, it's easy for me to talk about the Central Coast because that's the place I know. So it is very much the culture here and the idea that there's not a great deal of units and sort of strata title properties and those types of things. There's a few pockets where there's a higher concentration, but majority of people do like to have a backyard and have space and things like that. So it's understanding what the occupants want. Really, if you're buying a property for an investment, then you need to understand what the tenants want. If you're buying a property for as a home, when I'm representing clients that are owner occupiers, that's very personal. That's up to them, and it really is dependent on their individual needs and circumstances and what they want out of the property. So they need to look at things such as lifestyle and amenities and schools and whatever suits their lifestyle and their needs. If they're in retirement stage, they might want to be closer to the ocean or to lifestyle attractions. So really, it depends on it's a horses for courses approach.
Yeah, no, that's good. A couple of times in the conversation already, you've touched on growth drivers. Everyone seems to have a different definition of what are growth drivers. In the context of what you're doing, what would you consider to be the key growth drivers that investors need to focus on?
Definitely supply. Supply is one of the big things. So the Central Coast is quite landlocked, similar to Sydney. There's plenty of land on the Central Coast, but not all of it is accessible for development or new housing or new commercial even, because a lot of it's either green corridors or flood areas or bushfire zones. So it's the simple economics of supply versus demand. When you've got a very limited supply and you've got strong demand, that's one of the key things that are going to drive growth, both in the purchasing market and the rental market as well. Yeah. And so that demand versus supply is a key driver to look out for, but also just what suburbs, where the money's being spent, what infrastructure is being put into the areas to improve that, whether it be transport and accessibility, whether it be improved medical or increased schools. And if there's more schools going into an area, that's because there's more families going into that area, and that just shows the level of demand.
Yeah, spot on. No, really good thoughts there. Now, there's a lot of smoke and mirrors around the whole topic of exclusive off-market properties, particularly in the buyer's agents arena. What are your thoughts on the merits or otherwise of off-market properties?
Yeah, so off-market properties are broken up into pre-market, so before they actually come live on the market. So it's not that they would ever be off market forever, but they're getting access to them before they hit the market. Then there's sort of off market post market. So they've been on the market, but they've come off. They're still for sale, but they just don't, publicly advertise it. Yeah. And then there's the genuine off market where they're probably direct to vendor or something like that, where they're not actually with an agent. You just have access to a property directly to the vendor. So look, my thoughts on it, I know buyers agents love to talk about it, and it's this, very sort of elusive thing, but it's not always the cheapest. It's not necessarily a cheaper way of buying property, but it definitely is very critical it's not something you want to ignore, because in a market where there's very low supply and there's high demand, if you can get access to a property that 90% of the market or the other buyers don't have access to, you can buy it without the competition. You can get into something sooner, and we have already discussed the importance of time in purchasing property and the value of compound. So if you're missing out on property continually and 2 months, 3 months, 4 months goes past in a hot market, that can be hundreds of thousands of dollars.
True. That's a very good point. Well, the big question is always around this subject. How do buyers know they're actually getting a good property at a good price when it's off market and it hasn't been market tested?
Well, even a property that's on market, how market tested has it really been until it's sold? So yes, you're not really going up against other people, but I think I bring it back down to, that's when I start going back into the data around doing a valuation, doing a market analysis on the property and understanding, well, what have similar properties sold for, the way a valuer would value a property, use those methods and understand the value. You don't need the other buyers around you to be telling you what they think it's worth. At the end of the day, the market is what somebody's prepared to pay for it.
Yeah, no, that's a very good point. I mean, and sort of circling around this off-market area, I know there are, sadly, quite a number of buyers agents who really focus on lazy sales agents who just want to move a property quickly, and because a lower price is not going to affect their commission much, there's certainly a number of those. What I'm hearing from you is something different around identifying properties that don't involve a seller's agent at all. How do you go about actually hearing about and potentially buying those truly off-market properties where an agent's not involved?
I do a lot of networking, so I'm involved in a lot of community and business community networking events, and so when I'm out and about talking to people, they know what I do. I'm passionate about property, so I'm always talking about it. So they'll quite often say, "Look, I've got my dad's selling his my my dad passed away, so we're selling his property, or my brother's looking to sell his property. Do you have any clients? And look, I might not always have a client that matches up with that particular property, but it's getting access to those properties. And then if all of a sudden I'm talking to somebody and I go, oh, you know what, there's actually this property that is, nearly going to come to the market. We can get access to it. So it's just being, again, it's that boots on the ground. You can't do that from sitting behind a computer. You need to be out and about talking to people.
Yeah, and those relationships you're talking about, being active in the local community, those things are going to pop up. So no, that's a great share. Now, one of the make or break exercises in the whole property piece is that final negotiation of the deal, and given what you've shared with your Italian background and clearly trying to squeeze the most juice out of the lemon, what are your insider tips on negotiating a good property purchase?
Yeah, the first thing is to do a market analysis, understand what it's worth. And again, the more you know the market that you're buying in, the easier that is. But if you can look at recent sales, understand, that property to me is worth X dollars. When you're negotiating, you don't go above that. Or you can, and I call that the emotional premium, but you've got to be sort of willing to draw a line somewhere. That's when if you don't want to pay over market value, but you definitely don't want to be just paying. I see it a lot actually because of the market that I operate in. People sell, they might sell for $2 million in Sydney and come up here and purchase a property and relocate, and they might pay 1.2, 1.3, and they think that's great. I've just pocketed 700,000 and I've got probably a better home than what they had, but they probably didn't even need to pay 1.2 or 1.3. They probably could have picked it up for 1.1. So in that case, that's where I say, you need to understand the market and do a evaluation. But it's knowing what it's worth. And then when you negotiate, you've got to understand what the other side wants as well. So it's not always about price. A lot of the time it is, and people just think, cheapest price, or for the buyer, most expensive price for the seller. But sometimes it might be a longer settlement or something else in the deal. I had a client that was purchasing an acreage property, and there was an elderly lady selling it. Her brother had just been diagnosed with cancer and she couldn't look after the property anymore. Her husband had passed away. Yeah, she didn't even live there actually. She lived in elsewhere. And there was a lot of rubbish on the property. And so as part of the negotiation, we actually said, leave it as is, we'll clean it up. So rather than her have to clear out, hire a skip in and engage people to clean up the mess, we just said, you leave it. We use that to our advantage to negotiate a better deal.
I love it. And that's where asking the right questions to understand what's really important to the vendor in that sense is really key. And similar situations where the vendor might be trying to buy another place, and if you can release the deposit early to enable them to do that, then that might suddenly put your offer in front of others who are just focusing on the price piece. So I think you've shared something that's important there, that negotiation is not just about price, it's about all the other factors that are going to be important to creating a win-win outcome. So I love that. Michael, we've talked a lot about timing both today and in our chat on last week's episode. And you've written a really good blog on this on your website, which I encourage everyone to have a read of. Can you give us a bit of a summary of how can we solve the perfect timing puzzle to unlock the right time to purchase a property?
Yeah, so for me, it's very much about time in the market, not trying to time the market. Or timing the market. As I shared in last week's podcast on my own personal journey, the first property I purchased was in a very hot rising Sydney market. The next one I purchased was in a softer market, and it was about just getting in. At the end of the day, if I was trying to wait for the perfect time, there's never a perfect time, and I'd still be waiting. So I I don't think there really is a perfect time to buy. It's just buy when you can afford to, when you've got access to the finance or to the capital, because that's another thing which I've really seen in the last 12 to 18 months. A lot of people's borrowing capacity slashed with rising interest rates, which in turn, the property market, even if it had shifted downward in price, didn't shift down as much as people's borrowing capacity. So where they could buy a 4-bedroom house in a suburb, they can now only get a 3. So they've got to, maybe compromise on some things. So yeah, that's timing. Don't try and time the market. Just buy when you can.
Yeah, 100% agree exactly with what you've shared there. Now, in terms of your own buyers agency, the Central Coast Buyers Agency, what's your approach to handling competing or overlapping client briefs where you've got two people looking for the same thing at the same time? I've often wondered how a buyer's agent is going to disseminate which one gets the property that comes along first. How do you deal with that?
Yeah, so with my buyer's agency, I've the way I've structured it, I only work with a few clients at a time. It is just me in the business, and I intend to keep it that way so that all of my clients get direct access to me. And the way I deal with that scenario is basically I'm just very open and honest in my communication. And if I am working with a particular client and I start talking to somebody else that has the same brief, I just tell them that they have to wait.
Yeah, great.
So just don't take on two competing briefs.
Love it. Love that. That's again, that honesty comes through. What happens in the situation where you're working with a property purchaser and you can't source or secure a high quality property that's going to satisfy their brief in a reasonable time frame? What's your approach to that one?
Well, firstly, I try really hard to understand what their brief is as best as I can before they actually engage, so that I can understand whether we're actually a good fit to work together, and whether or not I can actually achieve their brief. If I've had to turn people away when they want the Ferrari for the Holden budget, I have to just say, look, I can't actually hit that brief. I'm only going to, if I say yes and say, yep, let's do it, I'm only going to set myself up for failure and you up for disappointment. So, trying really hard at the start to make sure that the brief is achievable. The time frame piece, I don't ever push someone to buy a property just so I can buy it quickly and keep my buying timeframes down. At the end of the day, they need to feel comfortable and confident that that is the right property for them. I'll give them the data and information around, as I say, it's an investment. I'll give them the data around why I think that's a good property for their strategy. Or if it's a owner-occupier, they really need to walk through that property and feel it. If they don't feel it, we keep looking. And so time frame is really dependent on them. If they need to buy quickly, I'll move quickly. Otherwise, I really try and make sure we take the time to find the right property rather than just buy the first one we look at.
Yeah, extremely well said. If we look at the end-to-end process in relation to the whole property buying piece, are there any other key elements of that process that you approach a little bit differently to what you see others doing?
Definitely, I don't know so much about comparing to others, but with my approach is very proactive in the search phase of the journey. Once I've got a client brief that I'm working with, I'm very proactive in finding that property or hunting that property down, rather than just sort of waiting for it to pop up on realestateanddomain.com, because if that was the case, they can do it themselves.
Yeah.
So I really try and be very proactive in that search. And then once we've found the property, it's guiding them through the process to successfully acquiring the property, understanding what needs to be done, when it needs to be done, so that everything's really smooth and seamless. And it's an enjoyable process for everyone then.
Yeah, no, and that communication piece is really key. Little things like if a really good quality property comes along that is going to be popular and it's likely to disappear quickly. How do you motivate and inspire a client and a potential buyer to move and not miss out on the opportunity?
Look, I definitely let them know. I can share other client stories of where they've missed out or things like that, and I can show them days on market for particular properties, things like that. But like I said, I don't push someone to buy a property. Sometimes they have to feel the pain, and I have to go through that with them. A lot of people did feel that, especially during the 2021 market when it was just very, very competitive.
Yep.
I can move quickly, but if the client doesn't come along and hesitates, then I'm not a pushy person. So if they need to learn that lesson, then I'll learn it. I'll just be there with them and feel that pain with them.
Yeah, no, extremely well said. So sort of bringing this all together, what's the profile of property buyers and investors who are and also aren't the best fit to work with you and Central Coast Buyers Agents?
So from an investment perspective, it's definitely I'm limited to who I can work with, mainly from a budget or a price point perspective. So people approach me investment property for 400,000 or 500,000. I just can't get properties at that price on the Central Coast. Not for the type of property I think is good. You can buy units and townhouses and things like that, but it's not really my strategy for an investment. And I'd much rather see someone go a little bit further afield or interstate or somewhere else that it fits in their price point, but they can buy much better quality property.
Yeah.
Definitely that's and so really it's someone probably looking for a bit more capital growth. You can achieve cash flow, like I said, with my strategy of that dual income piece. So you can get a bit of both capital growth and cash flow. But mainly the investor profile is someone that's looking for good capital growth. There's a lot of new properties being developed and land releases, so there's good depreciation benefits if people are interested in that as well.
Yep.
But it's probably sitting between that minimum 6, ideally 700 to $1 million as a purchase price for an investor.
Yep.
That's probably the ideal price point to purchase a really good quality property with good growth prospects. For the owner-occupier or holiday home buyer, it's really down to their personal preference where they want to be. They need to, if they know they want to be on the Central Coast, then I can help them find a good property in a good location that ticks their boxes. Price point is similar. It could be 600,000-700,000 upwards into the millions, but it's really around whatever they desire. But they need to know they want to be on the Central Coast. So
yes, yeah, and let's face it, it's a beautiful part of the world. And again, I think you make a very good point that the whole price points have shifted substantially post-pandemic. You mentioned the sort of 600 or mil mark. I'm seeing that pretty much across the board with investor clients that are looking at properties in different states. Very difficult now to get a growth property for much less than those levels. Those days are pretty much long gone now. And while you might be able to get cheaper properties, they're not going to have those growth drivers that we spoke about earlier, which is ultimately really what we're doing to invest in property to grow the nest egg and then converting it to cash flow at the other end of the journey. So love your share there. So given you're as active in property and have a passion for it as I do, what's your read on property conditions in the medium term, and where and what do you think are the best investment opportunities, particularly for growth investors in your area and beyond?
So crystal ball again, great question. But look, I think there's looking at a few of the key indicators. I think we're set for another period of growth again. Just simply, there is not enough supply and there is continued demand. Rental vacancies shrinking again, and yields are starting to push up. So I'm seeing a lot more interest from investors Whereas the last sort of 6 to 12 months, that interest has been a bit quieter, just due to a number of factors, rising interest rates, changes in policies around government policies and things like that, which investors are not liking. So there's been a bit of a pullback, but that's starting to come back again. Areas, well, look, obviously I'm very biased and I only focus on the Central Coast, but there's definitely suburbs within the coast that'll have better growth than some others. And so it's knowing which ones they are and why. And that's something I share with my clients.
Yeah, no, I love that. Really love the wisdom you've shared with us on that whole area. There's a growing interest in the buyer's agents profession, given that a lot of people are time poor now, and people are much more prepared to be borderless in their approach than they ever used to be, because of the fact that we're much more technology enabled now. So certainly for anyone who has an interest in the Central Coast, it would be well worth them having a chat with you, Michael. And now I want to switch into the round 2 of the Ambush Fast Forward series, where I give you the blindfold and a cigarette and I ask some quick questions. So to kick that one off, what's your favourite quote and why?
A quitter never wins and a winner never quits. And that was I first read in the book Think and Grow Rich. And that's an awesome book. But yeah, that for me very much sort of resonates with my goals, my strategy to achieving my ideal lifestyle. And basically, there was just nothing that was going to stop me. Yeah. And I did whatever it took to achieve where I've got.
Well, your life today—it's a living example of that. Now, I want to return to the literary field for me. You've mentioned a couple of books, the Robert Kiyosaki, Rich Dad Poor Dad, and the one you just mentioned there. Apart from those two, what's the top book that you'd recommend we read and why?
Yeah, so definitely Rich Dad Poor Dad would be my number one. And Think and Grow Rich. I think it's not sort of purely focused on property. It's really that Think and Grow Rich is more around any goal you have in your life that you want to achieve or obtain. The other one I'd mention is The Richest Man in Babylon.
Yeah,
it's a book that I read probably around 24, 25, and so this was after I bought my first property and I'd done the the subdivision by then, and I was trying to work out why I wasn't saving money. I was dumping all the money into the property and just focus purely on that. But I was like, what have I done differently from before I purchased it to now that I own it? What have I stopped doing? There was something I'd done and I wasn't saving money like I was before.
Yep.
And then I read that book, and that book, basically the principle is you need to pay yourself first.
Yeah.
So that was a really good book, and pick a percentage, 10%, 5%,
10%, yeah,
whatever it is that you can afford based on your other expenses. But you need to put some money aside for yourself, and that money needs to go to investing whatever it is you want to invest in.
Yeah, it's a great read, and a reasonably small book, but again, very timeless in its approach. So well worth having a read of that one. Next question is one that a lot of Aussies hate to pay tax. So what's the best tax saving tip that you can share with us, and what you've done to minimise the tax you pay?
I suppose the best tax saving tip is make less money. I think it's inevitable. We all know that, there's no two things more sure in life than death and taxes. Of course, I try to minimise tax where I can legally, and that's where I engage my accountant and leverage his expertise and knowledge to do that. But there's a little bit of a bugbear when I talk to young people, and they say they've gone and bought a car because they're trying to save on tax, reduce their taxable income. And to me, that's not an investment. it's not a great idea. And I look at it and I say, well, you've spent $1 to get 30 cents back when you could have just kept the dollar.
Yeah.
And yeah, so for me, it's like I don't necessarily do things to pay less tax. At the end of the day, if you're making more money, you're going to pay tax. You try and minimize it where you can, but that's my view.
Well, I think paying tax is an actually indicator you're doing all right. You should take it as a positive in that sense. And I know my accountant says to me, look, if you want to pay less tax, I can just bill you more. So just
I know how to do it.
Yeah, well, last question in the series, Michael. What's a personal happy habit or a daily discipline that you employ that you think's contributed most to your investment success today?
Definitely the small, consistent efforts, or what we call it in sport, the one percenters.
Yeah.
It's just doing those little things that, yeah, they're effort. They might not seem like it's a big, making a big difference, but when you look at it on the overall 1% actions add up to 100%. So it's just doing that small, consistent efforts. And back to that the scenario I gave with the compounding, you just do those small things, little efforts, and it really adds up to something great at the end. So that's probably been my little happy habit or something that I've always tried to do.
Yeah, I love that. Now, if we look back on our chat today and last week, what's a question you wish I'd asked you, and how would you have answered?
Probably a question you sent me was something around mentors and who have been the best mentors in my life. So I'd probably take a bit of an opportunity to give a shout out to a couple. The first one was, his name was David. He was the one I spoke to. He was a valuer. He was a father of a girl I went to school with. I spoke to him when I was looking to purchase my first property, and he sort of gave me some advice around different locations that he thought had good growth potential. So he definitely was a big, definitely set me up for where I've ended up. Yeah. The mortgage broker that I engaged, he was a family friend, and he of my dad's. And when I purchased my first property, and I had a budget of $500, and I was thinking, should I try and maybe spend a little bit less and not stretch myself too much, or I was a bit uncomfortable with going all out. And he used some other language, but basically he told me to stretch myself. I won't say exactly what he said, but that, and he's done it on more than one occasion. Basically, the second time I went to purchase a property, it was a quieter market, and I was really negotiating it quite hard. And he said to me, "How are you going with that purchase? Have you bought that property yet?" I said, "Oh no, they haven't accepted the deal I've put on the table." And he turned around and said, "If you don't buy it, I will." So basically he. In a couple of occasions, and I'll never forget those moments, but he really pushed me to take action when I was fearful or mucking around or whatever else. But so that there are two people, but definitely my biggest mentor was my dad, and I owe a lot to him, a lot of who I am, and the way I treat people and the way I think is definitely down to him. So big shout out to my dad, Joe. And I better give Mum a shout out to her, I'll get in trouble. Thank you.
Love the family connection, mate. Like you, I was blessed in the family I was born into, and sadly, both my parents are now passed away. But the legacy they've given me and the head start they've given me, and just in the way I approach life, I definitely wouldn't be doing what I'm doing if it wasn't for the guidance and support that they gave me over many years, mate. So. Respect your appreciation for your family there, mate. Now that sort of brings us to bring this all together. If you were to sort of summarise our conversation today and last week, what are your key takeaways and immediate actions that aspiring investors and property buyers need to take?
Yeah, so our conversation, I think, has been really focused around taking action, and early. I know my journey, I tried to act as quickly as I could and early in my life. That's really set me up to be where I am. But also just investing in yourself, arming yourself with as much knowledge as possible, and giving yourself the confidence to actually take the action.
Yeah, no, that's beautifully said. Just to close it out then, if I ask you to get invested, what does that mean to you?
Yeah, look, it is very much a holistic thing. As much as property and has been a vehicle for me, really was getting invested in all aspects of my life in terms of health, education, knowledge, all those types of things. You need to invest the time and the energy into those things, and sometimes the money, so that you can achieve whatever it is that you're looking to achieve.
Yeah, beautifully said. Thanks, Michael. And for those that are like myself who are listening in or watching us today and have really resonated with your messages, how can we find out more and get more involved with you?
They can find my contact details on the website, or just email me directly at michael@centralcoastba.com.au, or they can just give me a call, 0422 527 966.
Beautifully done. We'll make sure we've got all of that in the show notes. And I want to thank you again for the very, very generous time you've taken to share all of your wealth and wisdom with us over the last 2 episodes, Michael. And to keep the conversation going, I want to encourage everyone just to join and jump into our Property Hub Collective interactive Facebook community by clicking on the link in the show notes, and do that now. Because you're going to have an opportunity for Michael to answer any of your personal questions or queries, and to continue to share his knowledge with you and other like-minded, hardworking Aussies in a very safe, learning and no sales environment. So again, thanks for all your time, Michael, and let's keep the conversation going.
Thanks, Bushy. I've enjoyed speaking with you and your listeners, so thanks so much.
Thanks for tuning in to Get Invested on the Property Hub podcast channel, your home for property investment insights and inspiration. And don't leave yet until you've taken the next step towards living by design by getting my award-winning book, Get Invested, absolutely free when you sign up at knowhowproperty.com.au or bushymartin.com.au. And finally, make sure you subscribe to Property Hub to get your weekly dose of Get Invested inspiration, along with every episode of Realty Talk, Australia's leading property show for red-hot property investing news and insights, direct from industry leaders and influencers. Remember to always get invested in your knowledge, and I look forward to seeing you next time.